Welcome to the Fear and Greed Business News Afternoon Report for Tuesday, the 30th of July, 2024. I'm Sean Aylmer. Every afternoon, we've got the 5 stories that happened today that you need to know about. Story number 1, the S&P ASX 200 closed down 0.5% today to 7,953 points, with the materials index leading the market lower, while tech stocks also underperformed. Commonwealth Bank and Westpac were higher, but National Australia Bank and ANZ were lower, with the latter down more than 1%. WiseTech Global and Woodside were other poor performers. The best among the top 20 stocks outside the two banks were Telstra, CSL, Wesfarmers, Woolies, Coles and QBE. BHP fell 1.4% after announcing it will spend $3 billion as part of a joint venture to buy copper assets in South America. Ramsay Health Care dropped 3% after announcing the retirement of Chief Executive Craig McNally at the end of June next year. The private hospital operator has appointed ex-Woolies Supermarkets Managing Director Natalie Davis to start as CEO in October this year. Well, she'll be CEO-elect at least. That may actually create a succession headache at Woolies. Minor IGA rallied 3%, then fell to close down 4.4%. That's after reporting higher underlying earnings. Credit Corp shares rallied 14% after its guidance came in within analyst expectations. And Star Entertainment said it wasn't aware of any information that could have triggered the massive 15% jump in its share price yesterday. Story number 2, by far the worst performer on the share market today, and the reason the materials index was down so much was Fortescue Metals Group. Its share price fell 10%. Media reports suggest a large investor was wanting to offload $1.9 billion worth of discounted stock after last night's closing bell. That's a decent chunk of the miner, and the tumbling of its share price today means it's down nearly 40% since early in the year. Story number 3, a couple of weeks into the June quarter earnings season in the US and Europe, and results have been mixed. Companies are broadly lowering full-year sales and profit guidance as higher interest rates and weakness in China's economy hurts global consumer sentiment. That's taken the shine off solid earnings growth otherwise. A number of high-profile companies have underwhelmed investors, according to a report on Reuters, including McDonald's, automakers Nissan and Tesla, and consumer giants Nestle and Unilever. With roughly 40% of US and European companies reporting results so far, earnings have come in about as expected, but after the strong run by world equity markets, about as expected, seems a bit like a disappointment. There's a bunch of big names reporting in coming days, including Apple, Microsoft, Samsung, Toyota, ExxonMobil and Shell, L'Oreal and Adidas. Story number 4, Air New Zealand, which is jointly listed on the ASX and back home, has dumped its carbon emissions reductions target, saying they are unachievable by 2030. The Kiwi carrier has been aiming to slash its carbon intensity by nearly 29% compared to 2019 levels through the use of sustainable aviation fuel, lower emissions aircraft and other changes. But now Air New Zealand says many of the levers needed to meet the target are outside its control and remain challenging. Chief Executive Greg Foran said it had also become apparent in recent months that potential delays to fleet renewal plans posed an additional risk to the target's achievability. Air New Zealand has previously been one of the more outspoken carriers on sustainability issues and was one of the first to announce plans to develop carbon-neutral aircraft for regional routes in partnership with Airbus. And story number 5, the saying goes, it's good to follow the money. And that's worked for people who have followed Warren Buffett's money. His company, Berkshire Hathaway, has decided to cut its massive, profitable bet on Bank of America, the US's second largest lender, by a total of more than $3 billion. The conglomerate started building an investment in the bank in 2011 and has long reigned as the top shareholder. Even after the sales, Berkshire still holds 962 million shares, worth almost $40 billion. The legendary 93-year-old investor is cashing out with the price of Bank of America shares up 22% this year. That's it for the afternoon report for Tuesday, the 30th of July, 2024. Michael Thompson and I will be back tomorrow morning with the Wednesday edition of Fear and Greed Business News. I'm Sean Aylmer. Enjoy your evening.